Yeah. So let me quickly introduce our guests. So firstly, thank you everybody for taking the time out to join. Thank you, Ram. Thank you, Andre, for making the time. I'll do a quick round of introductions, and then I will request our guests to just briefly introduce their respective organizations, and then and after that we will begin, right? So we have with us today Andre and Ram. Andre is the founder of Customer and Advisory and advises fintech and financial institutions on trade finance, capital markets, and digital asset technologies. Andre spent 24 years at Swift, leading various innovations in the interbank payment, corporate treasury, and trade finance market. Andre is also a board member of the International Trade and Forfeiting Association and chairs the most active trade industries fintech committee. Andre is a leading advocate of the digitization of trade documents through its industry-leading DNI or Digital Negotiable Instrument initiative. And joining him alongside is Mr. Ram Iyer. Ram is the founder and CEO of Vayana Network, which is India's leading fintech for trade financing, enabling over $1 billion US of loans every month. Ram has been a serial entrepreneur for the last 3 decades and a veteran of the cash management space, having built successful ventures such as CashTech and Clayfin before Vayana. Ram is an MBA from the prestigious Indian Institute of Management, Ahmedabad. So, Andre, if I can request you to please introduce DNI initiative to all our guests here, and then after that I'll come to Ram to give a brief introduction about Vayana. So over to you, Andre.
Thank you. Thank you, Murtuza, for this introduction. I'm delighted to join the stage here with Ram, and thank you, Ram, and the team at Vayana Network for the great preparation and the initiation of this session. Delighted to be here and share some of the latest I have seen, at least from my activities on the digitization of trade. And let's really take an end-to-end perspective because it's a fascinating space with a lot of new entrants, such as indeed Vayana Network. So if we go back in time, Murtuza, and to answer your question, when so my background is with Swift, and I've worked on Swift innovation since the early 2000s. My first years at Swift was in IT, because that's where my heart was when I was younger, programming. But then I thought I need to understand better what the banks are doing with Swift. So I moved to product development, and we developed a lot of innovations. Then I moved indeed to the fintech space as an investor in fintechs, an advisor to fintechs, board member to fintechs, different roles. But my real focus is on highly specialized fintechs and how to help them find the early adopters. And that's what I was doing also at Swift on the Swift innovations 20 years ago on payments and treasury management. So in 2018, I joined also the board of the International Trade and Forfeiting Association, and I set up a fintech committee. And then we started to attract fintechs as members, and I thought, what are we going to do with them? Because it's good to attract them in a committee to put their logo on a slide, but we should be able to do more. And I thought there are 2 market transformations we could expect. And as an association, ITFA is there to connect people, to facilitate collaboration. So I set up the DNI initiative on the origination side to really connect those new technologies that I could see in the committee from some members with a market transformation around the digitization of negotiable instruments. And this is the whole MLETR we will discuss today. And I will explain what we have achieved there. And on the distribution side, we knew that the banks wanted to distribute more to institutional investors, and distributing to institutional investors is in some way different and sometimes completely different to distributing to credit insurers and banks. And we set up the TFD initiative to demonstrate to capital markets that trade as an asset class is becoming accessible from originators, serving corporates and SMEs. But basically now, if we look at the DNI initiative, we found out that the logic from a technology perspective is very similar to what we have seen on electronic signature. When electronic signature was introduced from a legal perspective and from a technology perspective, it was not such a big change at the end of the day. It was just about introducing a piece of technology delivered by very specialized vendors, like I will name a few, and I don't work for them, but DocuSign is very well known, Signicat is another one, and I'm sure there are many that are in that space, because it has become a mature market in some regions of the world. And it's all about integrating that piece of technology within a business process that is owned by the bank on a portal, or that is owned by a platform such as Vaiana on a proprietary portal, a proprietary application process. And on the D&I initiative, actually, the same is happening. It's all about adding an additional piece of technology, and we will talk about later about how it works or how it can work, and adding that piece of technology to digitize documents, title documents. But the logic for the end customer remains the same. It's all about using a bank portal or a platform in order to digitize a document, but the document is a title document, so it has more functional attributes and requires more technology than with the electronic signature. So we're using the electronic signature as part of the D&I initiative, but we're using additional technologies to digitize original documents and to achieve MLETR. So that piece of technology requires collaboration, and the goal of the D&I initiative is definitely to facilitate this collaboration between indeed those specialized MLETR vendors and the application owners, the financial institutions that are running the trade business. So I hope that is introducing the D&I initiative, and we have been busy for since mid-2019 now. So we are at a point now where we have multiple vendors having achieved that journey on the banking side, and we are working with vendors on the corporate side to equip corporates with the right technology to produce electronic negotiable instruments, and achieving interoperability between the corporate side and the banking side, so that we can scale the market.
Lovely. I think this is wonderful. Ram, a bit about Vaiana?
Yeah, actually, before I start, Andre kind of, triggered a lot of nostalgia for me. So I just have to talk a little bit about it. So in 95, I started working for ABN AMRO as someone putting in a cash management system. But we used to sit out of the trade finance room, and I had someone first time, and I'm not a banker, so explain to me how trade finance works. And it was a wall-to-wall whiteboard. And I thought he was going to start with the upper left and remain there. He kind of covered the entire time he finished our trade finance workflow works. And then, of course, in 98, 99, I did get involved with trade card to an extent when I was working with Citibank, for Citibank. And then, we were trying to figure out how we could kind of digitize or standardize, not digitize, standardize the formats. So I think the, interesting thing for me really from a Vaiana perspective has been very simple. Finally, at the end of the day, the standards, the technology, how is it accessible to every business in a supply chain? At a point where it can be completely digital, it can be completely, transferable, it can be portable, and more importantly, it can create a class of assets that we can kind of trade on. So I think, this initiative is something that, we are all rooting from the sidelines. I know Andre is busy in the thick of it, but we have to try and do everything to kind of encourage it. And I think, I was telling Andre before this that, it's 2023, and I'm hoping that in the next few years, we have all the countries signing up to it, and it'll have to be some kind of an UN initiative, I guess, to get everybody to in it. But we'll have to kind of get everybody to sign up to it. We'll have to have bodies like Cybos and others, a bunch of others to come into the whole process. But I'm really looking forward where Vaiana, at least from our own goal of making sure that small businesses can get trade credit at affordable, economical, and convenient, manner, really becomes a reality. And we only see digitization as the only way to do it. So I think that's really, for us, the core of what we do. And I think today's, this small session with Andre hopefully will give us a lot of optimism about where we are headed, and where we can kind of try and, see the future hold for us.
Wonderful. So I think great. We'll jump right into the webinar. And before we start, I'll request all our participants, in case if they have any questions, please post it in the chat box, and we will take that up in the end. So, before we really get into understanding the world of digital documents, let's look at what's the reality today, right? And if we see what is it that needs to be done today when you talk about issuing documents in the paper format. And question for you, Andre, how does that process today work in the non-digitized world, and why is it so inefficient? So why is it so important to actually digitize trade documents? I mean, there are estimates which are pegging savings from digitization of just bills of lading to about $6.5 trillion every year. So why do you think, so what is it that digitization will help us achieve?
So I think, yes, we have to separate two types of documents as part of the negotiable instruments. There are the logistic documents like the bill of lading and other logistic documents like the warehouse receipts on one side, which are created by the logistics world and then sometimes embraced by banks. As part of indeed banking services being added onto those trade flows. And then you have notes, which are much closer to banks as they are created. The two exist today in a non-digital form mainly. And this is because when those instruments were invented and the laws were created, electronic flows just did not exist. So, for instance, in the UK now, we are upgrading the English common law, and we are adding an electronic option on top of the 1882 Bill of Exchange Act. So we go back to the 19th century and say what has been done at that time is great. The Bill of Exchange, the promissory note, those negotiable instruments exist thanks to the legal work achieved back then in the 19th century, but they only had one option, is to use paper to exchange information, basically, and exchange a financial commitment, which those instruments represent. Now we are in the 21st century, there are new technologies, and we are at a point where indeed the move to digital is proven as adding value. The reason why this change is difficult is that, first of all, as I said, we need to change the laws that mandate the use of paper. Because if the law mandates the use of paper, like the English common law today still mandates the use of paper for enforcing those negotiable instruments, there is no other way than paper. Or you could move to a contractual approach, which many platforms have created for bills of lading, for instance. Many platforms exist, like I think a dozen platforms exist today, digitizing specific instruments like bills of lading. But then the issue is that they have to move to a contract law solution, which is only applicable to those who join the platform, who pay to join the platform, and who sign up to the contractual framework. And this is where we're running into very relevant solutions, but a lack of scalability, because you cannot expect all corporates to join all platforms. You cannot expect all banks to join all platforms. And those platforms are creating digital islands that are not talking to each other. This is why some of those trade flows have been digitized under contractual law, but the scalability has not been achieved in the market. So this is why those digitization percentages, the market penetration of those platforms, is still very low. But thanks to developments on the legal side, as we are doing in the UK right now, and in France and Germany and in the US as well, we are making sure that the common law, or Code Civil in France, are upgraded to recognize that electronic records are as valid as paper documents. And in that case, we believe the scalability will be more easily achievable for financial institutions and platforms to exchange electronic records instead of keeping the use of paper under common law.
I think some very fascinating points here, Andre. So Ram, given your experience of working in the trade finance space for so many years now, so while Andre highlighted the regulatory challenges and some technical challenges, what has your experience been? You've been speaking to so many banks over so many years. What are, in your view, some challenges which today need to be resolved for us to move to a world where we have, fully digitized documents?
Look, I mean, everybody, I guess, agrees that there should be common standards. Everybody agrees that there has to be a move towards digitization. I think the question is that everybody just has their own perspective of it. And, I think really important, it's really important. And, I think what Andre is trying to do is exceptionally commendable, is the fact that everybody has tried to get onto this path, but everybody has their own view about how they should do it. And you have to understand that trade, and especially cross-border trade, has lots of participants in it, lots of people who have invested, lots of systems, processes, procedures to kind of process things at their end. And therefore, for them to all kind of move on to a common standard is a process. It's time. It's just a question of once the common standards come out, everybody accepts it, there will be some time required to kind of roll it out. And I think that's really where I think a lot of, big players like Vienna, I think there are a bunch of global players, all will have to step in to make that transition as smooth as it can. The fact of the matter is that at some point in time, we'll have to look at it from a corridor perspective and make sure at least on the corridor level, we are kind of first ready to accept the standardization and digitization and, global standards. And then automatically the rest of will follow. If you try to make this a complete global process and say that everybody should follow, I don't think it's going to happen, not in Andre's lifetime and my lifetime at least. I think it has to be kind of rolled in. And I think, Andre, again, just before this, we were talking and he said G7 has taken it up, and he found it very interesting that they actually focused on trade. But I think the key is that everybody recognizes they have to do it. And if the top 7 countries and hopefully followed that by the next 13, which is G20, kind of adopts it, then at least you will see a huge movement towards making that the standard. Having said that, once you bring it in, you will still require to give time for people, systems to change, the whole bunch of items to change at that end. That one of the interesting things in India is that we had the 2000 IT Act. There was no case law in the court for about 20 years, accepting the IT Act digital signatures. While the law was there was no case law. There was no actual case that had come in before in the court questioning the validity or not questioning it. So, there is a process to it. I mean, we can all sit down and say, we all agree on what is the right thing to do. I just think it's a question of, just the elements of complexity that's involved here to kind of get it done. But, I think if the G7 can take a step ahead, and I think Andre is spending time there, or the G20 can get into the act, I think then you will have at least directionally, first thing is to agree on DNI. I think the first thing is to get DNI, MLETR, any other standards organized, accepted by everybody, and then a clear timetable laid as to how you're going to move to it. And then I think a lot of providers like us will get into the act and then try to kind of smoothen the process. We need that common standardization first.
So obviously, COVID played, I think, a big role in making the world realize how cumbersome the existing paper-based processes and the need for, digitization of trade documents. And then a lot of work has happened, right? Even before, even after, on MLETR, right? So, Andre, in your view, how is MLETR poised to solve all the challenges that both you and Ram spoke about right now? So if you could, shed some light on that for us.
Yes, indeed. When we're introducing digital capabilities, we, of course, as tech providers, because I'm active really on the technology side, we believe it's great and we don't understand why it's so slow to get the market to adopt it. That's often the case. But actually, for the corporates, for the banks, any change is a risk. So MLETR is basically a way to help. So it was created by the UN, and it is a legal framework that helps the jurisdictions, different countries, align their law or change their law to recognize the validity of electronic documents in the same way as the paper documents for negotiable instruments. So changing the law is an important step, not only for those who really want to adopt the new technologies, and on the DNI initiative, we have more and more early adopters of DNI technologies and instruments. I will come back on that later, but it's a key for those who hesitate to make the move. It's a key reassurance, because if they know they can get a legal opinion on the fact that this new common law solution that will be released in a few weeks in the UK is legally enforceable, they get a legal opinion on this, they can show that to their corporate clients. So it's a reassurance that the risk to move from paper to electronic is very limited. Of course, there is a need to adapt, but of course the banks and the corporates have already used electronic tools for payments, cash management, treasury, liquidity management, FX since years. We're talking really here about using additional technologies and a new legal framework for specific instruments. So the MLETR is a key catalyst to reassure the market. What we need then are platforms like Bayana to equip the corporates, because once the corporates are able to issue prom notes, bills of exchange, to process electronic bills of lading, to consume those at least, and engage with banks, the banks will be happy to finance, engage on more transactions. The most important is that the corporates get the legal reassurance and the technology to basically issue those instruments, those transactions. The banks do not expect that all transactions be generated on their own portal. If they are generated on specialized platforms like Viana, they will be happy with that as well. And this is what we discussed yesterday during the DNI initiative workshop with different vendors that on the banking side, powering the bank back office, and some vendors on the corporate side, on the large corporate side, like Kiriba, which are basically activating the corporate market and making this market interoperable between corporates and banks. We need to help the banks by bringing them clients to them, basically. And that's how we can also help the market scale in this context.
I think this is wonderful. I think we have two proponents of technology here with us. So question to you, Ram, in that case, you spoke about, tracking MLETR now for a while in your introduction. What, in your view, is the emerging landscape of the technology solutions that are coming up to help corporates digitize documents and which are MLETR compliant? And we see that currently in the market, a lot of these solutions rather are DLT based. So in your view, why is that? And probably, Andre, I'll get your thoughts on this as well after Ram. So Ram, over to you.
Look, the most fascinating and the evening news or page 3 news on trade finance is always the scams, right? First and foremost, we have to all understand that the trade finance, periodically the world gets rocked every 1 or 2 years with some very large issues about false documents, frauds happening on the documents, and multiple guys financing the same document and stuff like that. So that's the backdrop, and it's been a recurring feature on the trade world, I think, for many years now, that at some point in time every bank figures out that they have been taken for a ride. And I think what is really important, if you really want to kind of look at the, you mentioned DLT. At the end of the day, DLT, one fundamental thing the financial world has understood on DLT is it avoids double spending. It avoids the ability to have multiple versions of the truth. You have one version of the truth that everybody can refer to. And I think in the trade world, what MLETR will bring in is a standardized, interoperable, portable way of a standard document framework that can be used on bills of lading and other documents, negotiable instruments. But the moment you can do it and marry it to a DLT world, you essentially also get an ability for financial institutions and every single provider along the chain, not just the financial institution, to be able to kind of then know that there is only one truth in front of them, that there is this document that's only been used in one transaction. It's not been used in multiple transactions on financing. So I think that's really the interesting part of this world, that you have an asset, which is really what the bill of lading and everything else in a sense represents. And you have an a document that a truth symbol out there in terms of the DLT record that tells you that this is the document and it is immutable. It is it can be kind of traced back to its source. And then you can start building a lot of other financial structures on top of it that helps exporters and importers and the banks who are involved with it in the world, to kind of trade in it. And I think that's really what I see MLETR. And we talk about MLETR primarily because I think it's got a long history. It's got a long, lot of set of backers to it. And now we are seeing it getting into law in many countries. And I think that's probably the horse that we will all back in terms of the standard that's going to come out there. But if you can take that as the initial premise of the fact that across the world, there will be at least one common standard that we can all apply to a trade document, a negotiable trade document, and then use that to kind of create by the recording structure itself, which is the DLT here, and kind of an immutable record of it. And then it automatically then becomes an interesting document, interesting asset, I would say, not even a document, that can really be viewed by different people in different the organizations in very interesting and creative ways. In addition to the standard financing of it, tracking it, looking at through shipping corridors and everything else, you have one standard record moving through, but you also have this whole ability to create financial structures on it. So I actually am, I think once that comes in, once MLETR kind of becomes the standard and accepted standard legally, then and the people like us start rolling out, as Andre very rightly put, we will have to get the corporates first to adopt it. So then the banks kind of get very interested in adopting it. Banks are generally, they follow their customers, and customers will have to push them. I think that's absolutely the right way of doing it. And people like Vienna and others that Andre mentioned will all have to get involved in that act. But once we do that, and if we can do it in the DLT form, which is really, I think, a kind of an unspoken agreement, is consensus is happening. Consensus is a very strong word in the DLT world, but if we can, but an unspoken consensus is happening that this is the right way to do it, just because there are so many parties involved in a normal trade transaction that you need everybody to kind of have a common way of looking at that record. If you can marry that, then you automatically get, I think, a asset whose authenticity, whose integrity, and whose value is all very clear for everybody to understand. Then you obviously create, like when stock securities became dematted, it really fundamentally changed the way that people looked at stock and securities, right? And the way corporate bonds got, securitized in the world and became digital, it changed the market's dynamics and velocity itself. And I think that's what we want in the trade world, that all these assets that are moving around right now, we can see physically in containers, or maybe in the case of services in terms of invoices, actually happening to become assets that you can kind of leverage. So I think that's really what excites me. I'm just excited for a long time that, there's such a fantastic opportunity out there to kind of marry the physical world with a digital representation of it that everybody agrees on is the right digital representation, and then use that forward to kind of make it an asset that people can trade on. So I think to me, that's really the promise of MLETR. I mean, it's the beginning. Let's not confuse it that's the end. I mean, just by adopting MLETR, that's not it. It is a beginning to kind of create an whole set of very innovative, and I think much needed, not even innovative, I'd say much needed solutions on the trade world, on the trade financing world.
I think wonderful. So, Andre, I know in one of the conversations we had, while we were coming together for this webinar, you mentioned about interoperability, right? That the MLETR solution, and I think that's what the MLETR law also talks about, right? It talks about technological neutrality and interoperability. So how will a world, if you could, illustrate that with an example for us, that how will an interoperable world really look like in the MLETR world? That will be great for our audience.
Yes, and this is definitely the objective of MLETR, is to suggest that the from a legal perspective, the instrument is not locked into a contract. It can be operated under English common law or soon under the French Code Civil, because France is as quick as the UK now to upgrade the Code Civil, which is similar to the common law approach. So the point is all about let's avoid forcing the two parties into a contractual relationship in terms of agreeing how to digitize a document. Let's digitize the document under the applicable framework. Now, as Ram said, we are digitizing assets, and that's the key thing in MLETR. If you compare what we did over the last 30 years in payments, cash management, treasury, we digitized information. And that's why it has grown tremendously quick in that space, because it's not digital. It's not difficult to digitize information. This is the whole point of the internet. We digitize a payment instruction, a cash management report. We digitize an FX, a securities transaction, a trade transaction. But with MLETR and negotiable instruments, we are digitizing value, because the holder of a bill of exchange, the holder of a promissory note or bill of lading is actually holding a value in its hand. It's not like when you're holding a contract. Holding a piece of paper with a contract doesn't mean you can sell the contract. But when you're holding a bill of lading, you own the shipment. When you have the bill of lading, the bill of exchange or prom note in your hands and your name is on the paper, you're basically indeed entitled to receive money. So we are digitizing valuable documents that we should call assets indeed. The way to do that from a technology perspective and to achieve interoperability is, first of all, I would say similar to what we have seen in payments and cash management. And what I said also yesterday at the workshop here, we want the corporates to be equipped with the technology they choose. We want the banks to be able to use the technology they favor. And we want the two technology providers on the corporate side, on the bank side, to be able to exchange information as they do in payments, cash management today. But with MLETR, we want those software providers to be able to exchange digital assets representing bills of exchange, prom notes, and bills of lading. Those digital assets will then be using more technologies that we have been using previously for payments and cash management, because it's not just about sending a secure message or a SWIFT or an FTP file for cash management, for instance. It's all about transferring the value, the file representing the bill of exchange or prom notes. And this is where encryption technologies and DLT, as Ram said, is required to track the life cycle of the document. And by getting into the DLT space, without being too technical here, the DLT offers this visibility. Because when you receive a document representing a bill of exchange, you want to be sure it is still valid. You have access actually with encryption technologies, you have access to the DLT, and the DLT, because it is public, will help you validate that the file you received is still valid. So the DLT, in my view, is a new way of suggest a new open banking practice, because it's all about sharing information without sharing the details. We don't want to share the business content of the bill of exchange, that is in the file, but the tracking, the life cycle, the validity status, and possibly later more information such as the financing status to avoid double funding can be tracked on the DLT, so that everyone receiving that file can check at any point in time without paying anyone, because it's a public DLT, checking that the file that representing the negotiable instrument is still valid. So I have developed a framework whereby I'm now telling the banks who suggest DLT is dead or DLT is not useful because there were failures in some bank consortia, but I'm now suggesting DLT And digital asset technologies is an evolution of open banking. We have had 50 years ago SWIFT standards for bank to bank. We have ISO 20022 for corporate to bank to bank. We have APIs. And on top of APIs, we now have DLT to exchange information and rely on a common registry, a common notary of digital assets. There are many use cases in addition to that, but in the context of DNI, the DLT is useful as a technical notary of the life cycle of those assets. So this is how we are achieving interoperability. As part of the DNI initiative, we have the top trade finance back office vendors already engaged over the last 3 years on DNI technologies. We're now attracting more corporate platforms to equip the corporates, and the two worlds are able to interoperate thanks to specific vendors that are digitizing those assets. And I don't suggest there will be only one solution. There will be many solutions. So the market will define who will be the kind of DocuSign winner of the MLETR, because DocuSign is a big name in electronic signature. But here we need electronic signature, but we also need encryption technologies and DLT to achieve the whole MLETR features as suggested by UNCTRA.
I think this is wonderful. And I think this also gives me a good segue into the next, half of the webinar, if I may say so, because the idea is to now eventually understand the impact of this change in trend, the new regulations and this emerging technology on trade finance. So Ram, I know this is your favorite topic, trade finance. Before we get into understanding the impact, can you just talk about trade finance as an asset class, the allure of trade finance as an asset class? And I'll tell you why I use the word allure, because I have been speaking to a lot of, non-banking lenders, alternate lenders last 1 year, and they all find trade finance as a very interesting opportunity increasingly. So why do you think that really is the case? And how will, over time, adoption of MLETR and, these technologies really, give a boost to this asset class?
Look, I mean, fundamentally, I think trade is been as as prevalent as in history. So first and foremost, just as a domain of trade, I would just say everybody just gets it. Like, the fact that, there is something that's being traded, goods is moving from one place to the other, it's transferring title. I think that's something that everybody understands. In general, short-term assets, I think, are always a sector that a lot of investors are interested in world over. Now, you obviously have very, very liquid assets like securities and foreign currencies and people can trade on, and you have long-term assets, whether you're doing fundamental stocks or you're doing mortgages or you're doing other stuff. Having short-term assets itself as a class, I think, is of great allure to a lot of investors. There's a lot of money that backs short-term assets. And trade assets are, by definition, short-term assets. They typically don't exceed 6 months. And therefore, they kind of represent to most investors a very, very good way of getting an asset that's absolutely liquid to something that's going to take a long time to kind of mature. And I think that's the first and foremost, just as a class, I think trade assets, because one, the trade domain is kind of very easily understandable, and the asset that it kind of involves is something that people understand from an investor point of view or from an investing point of view, represents a tenor that they find very comfortable with. And I think that's why you will find that short-term trade assets will always be kind of something that investors will want. I think what's prevented them from kind of making this a class that they can invest in is very much the topic of this today's webinar, right? How do you kind of get a representation of that asset that, Andre talked about the value of that asset in a form that is full of integrity. It's full of, it is not a dispute, that that it's been something that can be respected and redeemed. Once you do that, you are going to find a lot of liquidity kind of coming down the direction. It has to. I mean, and I think it's not just the primary, but even secondary, and you will create secondary and secondary. You will create all the structures that we see in the typical other asset class models happening on the trade side also. But the important thing for it to really get traction is to really have, a common set of standards, a common set of frameworks, common set of standards, a common technology that you can, I do say common technology as in one provider, but as Andre said, it could be multiple guys, but the output of the technology is something that everybody can consume and understand and transfer without. So if you can really kind of make trade assets, something that's standardized, it can be traded on, in India, for example, just to give you an example, we have had something called TREDS, or the Trades Receivables Exchange. And one of the very interesting things that they came up with was something called factoring unit. So these basically kind of clubbed to a certain value the trade asset. And the factoring unit then became something you could trade on. So right now the regulator is kind of making a secondary market on, the factoring unit. That's a very, very interesting concept. Now here in India, within the boundaries of India, I think obviously we could standardize it. Imagine if this could be done world over. Imagine if we have a standard which not only just takes one bill of lading and puts value to it, but actually can club together multiple bills of lading, create a portfolio of different kinds of trade asset quality instruments, and then be able to kind of convert, put it together into one piece, and then allow investors to kind of invest into it. You suddenly create an incredible liquidity. You create equivalent of the bond markets in the trade asset class, and I think that's really the allure of it. The question really is, and the $1 million question or $1 billion or $1 trillion question, you said bill of lading takes 6.5 trillion or something like that, some absurd sum. But that's the question that one has to resolve. And I think it's interesting to me, and again, I just go back to my 90s example, is that people have been at it for very long periods of time because they understand that once they get it, this is what it could result in. So I don't think the question really is of what will be the outcome of it. I think the question really is when will it come in, so that the outcome can be delivered. The fact that you will have trade assets exceptionally irresistible to a whole set of liquidity providers is given. The question really is that how do you get it there? And I think that's really where I see MLETR, DLT, and one of the things you have to understand, I think one of the, and I'm just going to kind of segue a little bit out of this context, is that one of the important things we keep using the word DLT, or, we're trying to go back to the technology that kind of really was very attractive to all of us. I think what has happened now is that the representation of the application of the technology is what kind of caught everybody's eyes. And then has become too popular. What we really need to understand is that the technology itself, which was the ability to kind of create a distributed, decentralized mechanism of storage of data, of ever ensuring double spends don't happen, and all of that, is really the key thing. And if you can bring smart contracts and stuff like that, I can just see the velocity. And it's not just a question of the total value of the assets that you can trade, but the velocity in which you can trade those assets will just incredibly improve. So I think to me, that's the golden movement I'm waiting for, which is that we have the standards, we have the technology, all of that is there today. I don't think, honestly speaking, we are trying to invent something completely new. We are basically repurposing it. But if you can assemble these components together, you are going to create an asset class that I think every investor will want to participate. And if you can create this asset class in a way that it can be algorithmically driven, it can be driven across borders seamlessly, then you just create an exceptionally liquid asset class.
I think this is wonderful. And I think to just sort of understand the impact of, all the changes on trade finance. And this is a question for both of you. And I'll start with Andre first and then probably come back to you, Ram. Is that how will it, impact financing on three, if I can say three contours. One is, how will it make onboarding of businesses easier? Will it? Firstly, I think that's the question. And if so, then how? How will it aid financiers to better underwrite and hence, offer lower cost of financing? And three, how will, technologies like smart contracts really reduce the time and friction in settlement, particularly cross-border settlements? So, Andre, if you could take this first, and then I'll come to you, Ram.
Yes, I completely agree with Ram. We are not inventing something completely new. We are certainly the bill of exchange from those. They have been in existence since centuries, and they are very simple instruments. because they are unconditional and irrevocable payment undertakings. There is no discussion like you have on the letter of credit, where you could argue about, conditions, and you have experts for this, and legal battles sometimes on specific transactions. So we are making those instruments much more attractive for the market to use. An example that was shared yesterday by an alternative lender during the D&I initiative workshop here in London is whereby, thanks to the digitization of the bill of exchange, for cross-border trade, they have been able basically to not only decrease cost of the paper handling and the manual handling, but by decreasing the time to get the acceptance of the bill of exchange by the buyer, you actually increase the financing window. And for short-term trade, this is essential, because short-term trade is 30, 60, 90 days. If you can basically win 3 weeks by moving from paper to electronic, you're adding a great business opportunity, because first of all, for 30 days, 60 days transactions on paper, the financing opportunity might not be relevant because the paper will take so much time. There is not enough days to finance anymore. So we are basically offering new transactions for lenders to finance, thanks to the reduction of the time to process. And for the longer transactions, we are basically extending the existing financing opportunity to additional weeks. So we're moving from an operational efficiency benefit, which is the first benefit, but to a business development benefit, to add or offer more transactions to lenders to finance, thanks to the digitization. So it's definitely not just about moving from paper to digital. It's all about growing the business, making more transactions accessible for lenders, making more liquidity accessible for those who need it, the exporters mainly, and basically indeed and really demonstrating that digitization goes beyond this move to paperless trade. Now, as we have lenders, more and more alternative lenders that don't have huge balance sheet like the top banks have, they need indeed institutional investors or banks to fund their own operations. And this is the whole distribution space where indeed Ram explained that trade is a great asset class. And again, those instruments we are digitizing, in particular the bill of exchange and the prom notes, are very attractive to institutional investors, because institutional investors have already funded supply chain finance programs operated by large banks. But those supply chain finance programs operated by the large banks and platforms are often based on proprietary legal structures. And as soon as you have a proprietary legal structure, you need institutional investors to review that, because it might contain some flaws, some weaknesses, some risks. So they need to analyze all of those proprietary supply chain finance programs. And as we are introducing the bill of exchange in an electronic form, so more tracking, more visibility, more transparency, more fraud protection, and under common law, English common law or French Code Civil or the German law and so on, G7 legal frameworks, we are introducing a standardization of IPUs, irrevocable payment undertakings. So when institutional investors realize they can fund trade flows, bills of exchange, prom notes, receivables, financing activities, and rely on a common law legal framework, we offer them comfort again, that the legal framework is standardized. There is no additional contract that could contain flaws, and we are basically opening up even more this asset class to those capital markets investors. And this is the whole purpose of another initiative I set up in 2019, which is a community of institutional investors that have trade funds and indeed liquidity providers like credit insurers, pension funds, corporate treasuries, investing in those trade funds, and those trade funds extend liquidity to platforms and to factoring companies and to banks, basically at cross-border level. So the technology is there to automate this, but again, you could have your proprietary technology, you could have off-the-shelf technology, but we have proven that this is completely accessible now at a lower cost thanks to automation, and the automation helps to drive down the cost so that we make this asset class not only accessible but still attractive thanks to the right yield for the institutional investors, because you need to offer some basis points to institutional investors, otherwise the transactions are not attractive enough, and that is achieved through automation. We will also have tokenization in that space, but basically it's mainly around MRPA structures or securitization structures that are used depending on the preference of the institutional investors.
Lovely. So Ram, I think over to you for a comment on the same, and if you could also talk about how it will help realize. I know you've spoken several times about embedded financing, right? That how finance should be embedded, as in the workflow of trade itself and shouldn't be a separate activity. So how will all these changes help achieve that vision that you've held for so many years now?
Look, I mean, one of the things I just want to make sure that we all kind of, look at the overall, ecosystem of trade. And I think while MLETR and, the DNI, MLETR is part of the DNI, I guess, initiative, and the TFD, all will kind of look at promissory notes, bill of lading, digitize it and do everything. I think there are a bunch of other things also that are required. I know we have, G7 grab, and G20 also now kind of adopted LEI, the legal identifier status. That is very, very important, I think, from understanding that these parties are actually existing between the buyer and the seller. And then if you can associate with it AML, OFAC, because a lot of trade we have to understand is also now regulated by a lot of global, regional, local country regulations in terms of where trade can happen, not happen, what classes of products it can happen, and all of that stuff that you can actually, if you can embed that information also into something that can be understood. So I would think there's a whole scaffolding one has to do where, MLETR is obviously the key central asset, framework, digitization framework. But, if you really kind of look at everything else around it, you will have to build all of that stuff. And I think there's just series of initiatives happening. LEI is obviously one that we are closely involved with Rubix in terms of popularizing it. India is one of the first countries to kind of make it mandatory for everybody to have LEI above a certain size. And we see that kind of getting slowly adopted. And we also have talked to Glyph to kind of make sure that AML, OFAC are all roadmap items that we can kind of bring in. If you can bring that, and then you can say that this bill of lading itself is not only just an authentic, genuine document or the promissory note, but the parties in it are also authentic and genuine, and they are, they pass the regulatory scrutiny, then you suddenly have a very interesting asset class that nobody can dispute the veracity of. So I think that's the one point I just wanted to quickly kind of bring in. And I'm sure there'll be other standards that will be required as we go along. But I think the key thing really for me at least, and I know I come from the EDI era where there were a lot of large guys trying to kind of standardize the actual trade information through EDI standards. And I think what I realized is that while the large corporates easily got it or invested time in it and money and IT systems in it, the real small companies struggle to kind of get it into the core of their operations. And I think one of the things that we have to remember with these standards, if you really want to kind of make it accessible, look, I mean, with the large corporates and the large banks, I think will definitely be the early adopters. But if you really want to kind of roll it in and say that we are having impact, we are letting small businesses wherever they are, Germany, India, Ethiopia, Vietnam, or in Chile or Peru, kind of adopt it, then you will need to kind of create not just the technology, but also make the technology accessible. So to me, the embedded financing is not really a question about standards and everything else. It is by making the entire experience of getting trade executed and trade financing to happen to be something that's enshrined in it, rather than having to go and do multiple processes to make it happen. And I think that's the only way in which small businesses, and I think, I'm a very fervent believer that small businesses are kind of often, everybody understands the importance, but nobody really kind of gives them the importance that they deserve, because they just create tremendous amount of, social benefits. So if you really want to kind of say that, I'm making this happen, technology happen, Andre is working very hard at it. I know Vienna, we are working very hard at it. All of us are working very hard at creating these standards and creating the systems to manage those standards. And we are talking about investors and institutional investors and asset classes. I think all of that finally has to get the impact on the small business. And to me, embedded financing is not really so much I know we love labels and we love jargon, and it's a new term that's got fancy over the last 3-4 years. But I think that the core of it really is all about making it very simple for people to participate in, to get their trade financed. Simple, first and foremost, without them having to do multiple things to get it financed. So if I do say that there is a bill of lading that is universally accepted, the asset class is, the value is understood, it's not disputable, the people participating in it are identifiable and have passed through the regulatory scrutiny, the financing has got to be automatic. Now, we talked about DLT. I think we have to talk about smart contracts. We have to talk about, a bunch of currencies that can work seamlessly across borders. Obviously stable coins and stuff were one example of it. We'll, probably be hearing a lot about tokenized deposits and stuff like that, whatever it be. At the end of the day, the creation of the trade parties identification, the trade itself as represented by the bill of lading, and the obligation to pay on the trade, which is the promissory notes and stuff like that. And then the ability to kind of make all of this available in a digital form that everybody can understand, and then to get financing for 45 days, 60 days, 90 days, 100 days, or 200 days that the exporter requires, getting that, and then allowing a whole bunch of institutions to then actually get involved in rediscounting it, trading on it, sharing assets to it. I think that'll all follow the pattern. So I think, to me, for me, when I would say it has arrived, when a local small business is also participating in it. But I'll say it is really arrived when the local business doesn't understand that it's actually doing any of this stuff. And that to me is embedded financing, that I don't know what MLETR is, I don't care. But, it's automatically happening, right? I'm not requiring to go to 5 banks and get financing, it's automatically happening. That's really embedded for me. And I think that's really the standard we all have to hold ourselves up to.
I think this is lovely. I think we really had time for only so much, while the conversation is very, very fascinating. And we have a few questions from our audience. So maybe we have time for a couple of them. So I think, Andre, one for you, and I'm trying to roll up a couple of questions into this one. One is, what is your estimate of how, quickly will MLETR be adopted in emerging markets like India and UAE? To go along with it, what is the status of some of the pilots that are running in these markets?
So yes, we are still in early days, but today I already see we have more alternative lenders and platforms, SME-focused platforms, jumping on the opportunity than the large banks. So there is a tendency from tech providers to always talk to the large banks because they dream about working with the one and the other big names. But actually, the real appetite to take advantage of those innovations are coming from tech-minded platforms like Vienna Exchange and other alternative lenders. We have a few here in the UK that are already operating D&I transactions under contract law, because the common law solution is not yet available, but they will take advantage of the common law very soon. The names are Mercor, Trade River, Trade Finance Global. They were speaking yesterday at the workshop. So they are public names. Feel free to talk to them to see how they are progressing on the UK side. But I think we can create the same dynamic across the world in regions where you have a lot of small exporters like India, Middle East, Asia, and then bringing this energy back and those transactions back to the UK European banks, because they need to be convinced thanks to business opportunities more than thanks to tech providers. So bringing the real the need for working capital from the SME space on the back of platforms like Vienna is the right starting point for me, because if we bring transactions to, their buyers in Europe, in UK or US, and then those buyers working with their preferred banks, we really implement the four corner model where particular platforms can take advantage or can serve the SMEs in those exporting countries, and the large banks can take care of the large buyers in their countries and take advantage of prom notes, bills of exchange, sometimes bills of lading, of course, to fund the exporters more quickly and more efficiently. So I like to work with alternative lenders, tech-minded platforms who are more hungry than the top banks, because the top banks have, of course, more internal procedures before launching new products. But if we bring them transactions, they will jump on this because this will justify also the need to invest in those innovations. So I have a lot of large banks asking me, and really, I'm talking about the top 10 banks asking me, how should we get started? And of course, I can tell them, try this technology, try that technology. But if I can get them real use cases, and this is happening today with some, that is far more efficient and attractive to them. So focusing, as Ram said at the beginning, on specific corridors, Latin America, Europe, UK, or India, Middle East, to Europe, UK, or US. We have top banks as part of the DNI initiative in those G7 countries, completely engaged on MLETR, so they understand the theory. We just need to bring them transactions to get them going. So I think that could go really fast, because some of those top banks have been following our institutional developments, legal developments over the last 3 years. They joined workshops when we organized some webinars and on-site workshops like yesterday, and they just need a justification for their management to spend time on this topic rather than only learning about the topic. And working with Vaiana and others, alternative lenders focusing on SMEs is, in my view, the best approach. There is another angle and pressure I'm putting on those banks, because they have been asking their governments, like in France, where I was part of the process. They have been asking their governments to change the law, and the changes of law in France have been approved in June. The government will start the formal process with parliament and so on. But I'm telling them, the parliament and government will come back to you in 9 months or 1 year and ask, what have you been doing with the changes of law? Have you effectively used the new law in the UK, in France, in Germany, to serve corporates? And what are the statistics around the transactions you have been serving? So the banks should not now put themselves in a wait-and-see position. They should be proactive in terms of demonstrating that what they have been asking to their parliaments and government has been really embraced by themselves to serve corporates and SMEs around the world.
Lovely. So I think last question of the day, Ram, for you. As India's leading fintech for supply chain financing, in fact, the largest, how are you thinking of these changes? What is Vaiana doing about it? If you could, shed some light on this for our audience, just so that you continue to remain, relevant, and you continue to offer, what is needed by the market.
Look, I think, one of the important things, at least I have understood so far, is that everybody moves at their own pace, customers, banks, and you will have to kind of be with them in that journey. There is no sudden turns you can take in that journey. They all like to go at their own pace. So you have to kind of create multiple solutions, all converging finally on the promised land. But, you have to create multiple solutions. So as we already are present in the international cross-border exchange to allow for trade anywhere from any part of the world to be financed. I think that obviously is one very important thing, which is the Vaiana Trade Exchange that Andre talked about. The second is on the ILEI side. I think we are very heavily involved in kind of making sure that that's something available, not just in India, but across many corridors. And we're working very closely with Glyph to get that done. I know we are looking forward to working with the DNI and the other initiatives to try and make that centerpiece of all the platforms that we have on the trade side. But I think the key thing that we are really working on, and I think that's the most important thing, is really how we can get small businesses. And I talked about embedded financing. How do I make that old customer experience or the small business experience of dealing with these changes as less friction as possible? And I think the Vayana VDP platform, as we call it, the Vayana digital platform, really is to kind of try and get trade happening in a manner that it's already an asset class. The trade happening in a manner that that asset is actually getting financed in with smart contracts and stuff, and the trade happening in such a manner that then those assets can then be secondary traded in variety of exchanges that exist today in the world. I think those are the key things that I really look forward in the next 1-2 years. And the reason why we've been following MLETR and everything else is that each one of those are exceptionally important for us to kind of finally get the impact we are looking for. We can't do this on paper bound instruments. We can't do it even with PDF scans of bills of lading or stuff like that. We are doing that today in the Vayana Trade Exchange because that's what really the stuff is. But I think we're all kind of creating systems and making sure we're ready for the day. And I think Andre made a very, very important point. At the ultimate is not creation of the standards. It's really about how much business flows through those standards. And that's really what we're going to all get accountable for. And I think the key thing is that we have now within Vayana itself 2 or 3 initiatives to kind of take advantage of those standards coming in and proving to banks and to exporters and importers that adopting those standards actually creates tremendous ways of new ways of financing and much cheaper rates. I think ultimately that's really the yardstick they are going to use for determining whether they'll use a standard or not. And then try and take that down to small businesses so that they don't have to really worry about it, but they get the benefit of it. So I think that's really, if I were to talk about the roadmap of Vayana at least.
This is wonderful. I think great note to end this on. Thank you very much, Andre, for taking the time to speak to us from your extremely busy and very hectic schedule. Same for you, Ram, as well. I know you've been very, very busy. So thank you so much for taking the time and sharing such wonderful thoughts, learnings, experiences with all of us. Thank you to the audience, all of you who took the time to join us for this webinar. I look forward to speaking to you again, Andre, very soon, to you, Ram, very soon. Hopefully, all of us can collaborate on another webinar very soon as this space evolves further. Thank you very much.
Hey, thank you. It's been a pleasure. Thanks a lot, Andre.
Thank you, Ram.
Thank you
for the invite, and Murtuza for setting this up very nicely.
Thank you. Thank you.
Talk soon.
Thanks.
Bye-bye.
Bye.